Okay, welcome to another Florida home buyers podcast with Brent and Lee. And tonight we're talking about should you buy or should you rent in Florida right now? So we're going to go through a bunch of slides with you, and Brent's got some things to show you tonight on mortgages and what you can expect from getting a mortgage even at these higher rates than renting, right, Brent?
That's right. That's right. Kind of a
All right.
buy versus rent look tonight too.
Right. So if this is the first time you've been to our channel, don't forget to subscribe. There's a picture of Henry right there. He's actually in the video with us today. So he's
Got my girl in
joining
the
us.
back right here, Lee.
Huh?
Got my
I know.
girl right in the
I
back here.
know. She should be watching too.
That's right.
Yeah, she's not. She's in trouble.
That's right.
My wife never watches. She doesn't care.
She doesn't care.
She doesn't I have to make her watch my videos. She says I see you too much as it is.
There you go.
So anyways, she does some good filming work though. She'll get behind the camera and
She does.
yeah, she does a good job. So all those videos you see of me in front of the camera, she's behind it.
All
So
right.
that's always good. All right, so let's get going, Brent.
Sure.
What's happening in the market today? We've got some headlines, right? U.S. housing market. I'm gonna change glasses so I don't get so much glare. I think these look better anyways. All right. So there's a little bit of glare. But anyways, U.S. housing market stares down even bigger economy shock. Mortgage rates near 7%. Mortgage rates reach highest level since 2008. 30-year fixed mortgage jumps over 7%. That's all your fault, Brent.
I know.
And then we got this one where we're like mortgage rates rise for the sixth consecutive week. Uncertainty and volatility in the financial markets is heavily impacting mortgage rates. Boy, is that the truth there.
Yeah.
So expound.
Heavy week. Yeah,
Brent,
heavy week.
Man, it's been a rough week, hasn't it?
It really, very volatile. What's happened in the last few days, the producer price index, the raw goods, that are used to make consumer goods, that inflation figure came out yesterday, and that came in hot, and that sent the markets up as far as the interest rates. And then this morning at 8:30, the CPI came out. Just a little higher than expectations, but everyone just went off the rails immediately. The expected numbers were 0.4%, 0.2% per month over month inflation on consumer goods for September, and it came in at 0.4. Annualized, that's still 4.8. So in the big picture, it's not too bad. However, the expectations were half that. And so the bond prices, dropped. We saw bonds prices drop, 125 basis points on the news. And of course, that the inverse relationship rates went up, quite a bit this morning. And then it crawled all the way back to down just 9 points on the day. So once the market settled into the idea of that, hey, we've already reached peak inflation, like the peak was actually in March. And now the figures year over year have been going back since that time. And so when you really settle in and look at the numbers, because we're looking at this kind of the rear view mirror, you know what I mean? And so, you kind of have to put it in perspective. And I think, at the beginning of the day, the Fed funds futures market was, indicating a 1%, hike at the next Fed meeting was actually on the table, and that backed off to a 2%, chance. That's the Fed futures market's a way you can basically bet on what the Fed's going to do, and that indicated just a 2% chance at the end of the day. And the markets were down 500 points. The Dow was down 500. I don't know what it ended up. I think it was up over 1,200 at one point. I don't know where it closed, but I think the market kind of settled back, and after the news kind of, was pondered for a bit. Hey, you know what? The worst is behind us as far as inflation. The rate hikes are, probably worse behind us. So that's built into the market. So it was very volatile.
Yeah. Well, I mean, some good stock market. I mean, I watch some really smart people, and they don't think that the stock market's reached the bottom. They don't know if it's in 3 weeks or 3 months, but they don't think it's reached the bottom. So when you're looking at stuff like this, Brent, I always, you know, right now people really need to be shopping rates.
Mm-hmm.
They can't just go to a bank where, some guy that was a teller is doing mortgages. They really need to spend, make sure that they're doing business with a mortgage broker or a lender that is watching the market on a daily basis so that they can lock the rate on the best day. Talk about that, because that has a lot to do with what's going on right now. There's so much volatility, and like you were saying, the rates are jumping super high and then coming back down, and it's a daily thing right now. And so, in buying a home, we definitely want folks to know that they're if they're buying in this market right now, they want to make sure they have somebody like yourself that's gonna watch the market and lock the rate.
Absolutely. Well, there are things they can do themselves. The three, I used to call it the three legs of the loan, the three legs that hold up a stool and the loan being the stool. This is a thing. There's the credit course is a piece. We do what if scenarios. What if we pay this debt down? What if we get this collection removed? That type of thing. It helps get the score up. Then how we look at the income, the most favorable way to look at the income, and then of course the assets, down payment, and if we need mortgage insurance, we evaluate all those things to see what the core tenets of the mortgage, getting it put together. But beyond that, of course, watching the market in real time, especially now, we get alerts for locks, alerts to float if the market's moving, whether if it's trending, the bond's trending up, we want to float those loans and not lock them if we anticipate a pricing improvement in that given day. And the first time, we did this, I've been doing this for like 20 some years now. The first time we utilized that service, we saved over $8,000 for our clients the first day we used it. So, I mean, it just, it's really impactful. And today, as far as, the what if scenarios, seeing what we can do to get someone's credit score up, I saved $10,000 for someone today. So
Right.
it's just by getting their score up, 40 points, big difference, especially now. These lenders are starting to tighten up and looking for those, solid loans. They're looking for higher FICO scores now, because we don't see 20% appreciation. We don't have that going for us, where if they make a loan today, the home's going to be worth 20% more next year. It's going to be
Right.
more reasonable. There might be gains, or might be a small loss even, but that 20% appreciation is kind of off the table for next year.
Right. Right. So here's a little market update that I follow. So this came out yesterday. Residential construction spending slipped a little bit by 1%, but home builders are still spending 12.5% higher than they did a year ago. So more new homes will keep coming on the market. So that's good. That's adding to inventory, because that's what we're seeing right now. Lots of inventory coming on the market.
Mm-hmm.
I think we'll be at a buyer's market inventory within the next couple of months,
Mm-hmm.
just like Black Knight said that would happen. So then you've got showing time, which is what we click on as real estate agents to find, to set up a showing for a client. They saw a decline in home showing traffic. The decline in home showing traffic is leveling off. So buyers are starting to get back in the market, and I'm seeing that now. We're showing houses, we're selling homes. We're going to talk about that. We're not selling homes for what we were anymore. But we're selling homes again,
Mm-hmm.
and we're seeing buyers get back in the market, calling us. We're getting calls weekly. People come into town from different places, all from our YouTube channel. So what's drawing them back into the market is less competition, right? More listings, so they have more options. I have showings tomorrow. There's four houses on the same street in Port St. Lucie in Tradition. Four houses,
Wow.
and they're all over 3,000 square foot. So,
Any with
obviously,
pools?
then there's no. So now I'm going to show a client four houses on the same street, right? So who's negotiating now?
Right. Yeah. The buyers
Right.
are.
You got
Right.
if you're the seller,
Working
you
with
got
them.
three
Yes.
houses. There were five, one came off the market, right? They canceled the listing today. So we're showing four of them. They're like 1, 2, 3, 4. And so now it's like, hey, there's 4 houses on the market. We're going to make an offer on, 1 or 2 or 3 and get the price that my client wants. That's going to make him, comfortable, make them comfortable. Right. So, and we just did that here in Jupiter. House is on the market for $1 million. They had a price drop to $899,000, and we ended up at $745,000. So, I mean, $845,000.
845,
so, yeah. So, and we just dropped the price on a listing. We had to do that, and but it sold within a couple of days. So, buyers are getting smart. They're seeing these price drops, and they're buying the homes that are making sense to them.
And we're starting to see seller concessions too.
Right. We're starting to see. I had that offered to me today. Matter of fact, about the showings tomorrow. So, Black Knight's home price index fell by 0.98% in August. We're seeing higher. I'm seeing 15-20% price drops right now. We're going to show you that in a minute. So prices are definitely coming down, and we're seeing that in the market. So HomeLight just put this article out, and so getting specific to the Florida market, changing 2022 Florida real estate market forecast. What's still to come, right? So experts believe that because of the demographics of Florida's population is expected to grow to more than 300,000 people per year and surpass 23 million by April 2025. Yeah. So when you look at this and you see the amount of people moving here now, I mean, I want to say this, it's a horrendous thing that happened on the West Coast. I have agents over there that are in my company that are dealing with it, that were part of that. And they're literally getting calls from a couple of them have YouTube channels, and they're getting calls from people from out of state asking, hey, are there any deals? So people asking to buy homes in a hurricane hit area. That's how bad they want to get to Florida. Yeah. So, I mean, this is going to, we're going to see the market continue to grow. So, so what can Florida home sellers expect, though? So if you're thinking of selling your home in Florida, here's a few things that you can expect. And I've brought this up in other videos when we started seeing the market changing over the summer, but they really break it down. Don't expect to stay with the high prices forever. Prices are coming down. Be prepared to negotiate now, right? So we're seeing that in every deal. There's negotiations. Plan on high rent and living cost in Florida. So rents, they believe, are going to stay high, and the cost of living is going to continue to go up because we're starting to see Florida becoming one of the most expensive markets in the United States. So here's an example of what not to do if you're a seller. Okay. This house just hit the market 6 days ago. Now this is Arden. So this is out by Lion Country Safari, right? So what do you think on Southern from 95, 45 minutes, right? West Palm Beach, no traffic, right? Right. That's at least a 45-minute drive, right? Yep. And then so you're probably 20 minutes, 25 minutes from the turnpike, but there's nothing out there. I mean, you could get to Wellington from there probably in 30 minutes, right? This is pretty far out there. I mean, there's nothing but alligators and then Lions Country Safari out there. So the house, they put it on the market, if you notice here, for $1.7 million. It's 4,873 square foot under air, 5 bedrooms, 4 baths. The bed masters on the first floor. That's always really nice. So you got 4.5 baths in this house, 2-story, right? So really nice house, 1.7 million. Here's the problem. It's a year old and it sold for 1.5. I mean, for $1,050,000, right? So so they're trying to make they're trying to make $650,000 on this house. It's not going to sell. As a matter of fact, there's a good possibility because this community before COVID was struggling. Westlake was struggling. It was struggling. These communities far out west were struggling. So when you're seeing these communities out west struggling, and you're seeing like the home that I'm talking about is in Jupiter, in Abacoa, the most desired spot. I would say probably Jupiter is one of the most desired communities in the state of Florida.
Yes.
Right. Would you not agree with that?
I'd agree 100% with that.
So we're seeing, so we're seeing the heck's going on here?
I was going to ask you, Lee, how much of these price drops are attributed to people doing this type of thing, just putting their homes, just trying to get, trying to catch the top of the market?
Well, I think a lot of them are. I mean, I think that you're seeing a lot of them are. And so, that's happening for sure because people are overpricing their homes. But, I think you're going to have a hard time selling that house for $1 million right now.
Yeah.
You're in a buyer's market.
Yeah. You have to price it right. Absolutely. Now
you have to price it right. So let's look at that. Let's look. So here's the MLS, right? So this is the entire market I work in. This is from Boca to Port St. Lucie, right? So you can see new listing. Let's go this way so we can make it go a little slower. Back on the market, price reduced. New listing, back on the market, price reduced. Back on the market, new listing, price reduced, price reduced, price reduced. Price reduced, 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 price reduced. So, home prices are coming down. And I will tell you the house here that we just sold in Jupiter would appraise at $1 million.
Right.
And the one in my listing in Port St. Lucie would appraise for what I had it on the market for also. So with that being said, people just aren't even willing to pay it though anymore.
Right.
Because it was on the market. The one here in Jupiter was on the market for 90 days. We were on the market for 40 or 30, not even. I just went to her and told her, and here's what I would say to sellers right now is that if you're looking to sell your home, and this is what I've told to all of our listings and our sellers, if you're looking to sell your home in this market, instead of riding it to the bottom, just come up with the price right now that you are willing to take, and drop the price, right to that because you'll sell it, because you're competing against these new home builders and they're everywhere.
And the new listings that are coming online, people trying to catch the top. I think
exactly.
There's a rush for the people trying to catch the top, I think, too. If they've been thinking about possibly selling,
Right. So this is from the same article, what Florida home buyers can expect. You can expect mortgage rates to continue to rise, right? I mean, I'll go back to the comment I had a couple of weeks ago, about a week. It was last week. Boy, this guy was wrong. I was, and every other expert in the market was wrong too about these interest rates. And what do you think about my feeling here? Because I feel that the Fed's in control of the entire market right now.
You know what? I think, we're seeing like you say, the price reductions. We're seeing this type of thing. And there's a wealth effect. It's a very real thing that happens when people feel their assets are worth less. even though they're not planning to sell or move or anything, nothing's really changing for them. There's just a sense that they're not wealthy anymore. They start buying less. They start, they start watching their spending, and that's kind of becomes a self-fulfilling prophecy, right? I mean,
Right.
everyone stops purchasing things, luxury items. They stop going out to eat, all those types of things, because they don't feel wealthy. And so, that's a very very real thing. The one thing I do notice that as far as rates are concerned, the 10-year Treasury is it doesn't set interest rates for mortgages, but it's a really good guideline, and they're very significant psychological boundaries about every
Well,
3.5,
I was
3.75,
listening to the
4%.
market news today, and I forget who said it, but I forget who said it, but they said that if you want to know it, that's what we got to follow now. We got to follow the 10-year Treasury
Yeah.
because that's the only place you're going to see rates right
Right.
now where you're going to have any kind of understanding of where rates may be going.
Yeah, and a 10-year Treasury, it's a Treasury note. It's the federal government borrowing money is what it is. It's a 10-year term, and so it most resembles a mortgage investment, right? It's guaranteed to some degree, but it's backed by the government as opposed to property. So the rates are lower than what you expect for a mortgage, because there is more risk in a mortgage, obviously, if you have to foreclose on it, so on and so forth. But it tends to mirror mortgage rates, and the 10-year Treasury has been turned back from that 4% critical. It's a psychological barrier. It popped to 4.4 this morning, and then quickly went down below 4, and it's touched it like 3 or 4 times. And so what that means, what that does as far as the trading community, people that invest in bonds, that type of thing, it becomes a kind of a ceiling of resistance. And it's a pretty firm ceiling right now. So I think, rates could go up. Certainly the Fed's going to raise rates, but that's pretty much baked in. There's a solid 1.25% increase in the Fed funds rate baked into the next 2 meetings. I think with the inflation numbers that came out today, we have one more PCE report, personal consumption expenditures report, that's going to be released before the Fed meets next time. But having said that, I think, which is a primary gauge on inflation, I think we're seeing towards the top is what the market's saying anyway, as far as where rates are going to go.
Well, I mean, the Fed keeps I don't know, I just believe that they keep saying they want to get unemployment to 5%, and and that's coming out of his mouth all the time.
Yeah.
And I just don't see how they're going to do it. I mean, we have a really strong job market right now. I just in the administration is pumping money into the economy, which is causing his problem to be worse, and he's just cranking rates up. And I mean, no one expected this. So
it's to stop inflation, right?
So expecting mortgage rates to rise, I mean, I don't know. I mean, this keeps going on. I mean, we could be at 12%. I mean, it really, we've been there before. It's not like the first time ever. I mean,
no.
So, and then we're going to see gas prices continue to go up. That's going to, that's happening right now, especially with the Saudis pulling back production. So, right now, rates are higher, but but if you read number 2, buyers are gaining an edge in the market. You can go and negotiate. You can negotiate a buy down, or you can negotiate a credit where you could, you could raise the price of the house, because right now, I mean, prices are coming down 10, 15, 20%. And usually, and I can tell you, I'm looking at I'm doing a lot of research on a daily basis, and I'm seeing that, these homes would appraise. Now, I did talk to an appraiser today, and he says that he's looking at June prices to appraise for now.
Right.
Right. So they're looking at June to saying, hey, this is the appraisal right here. So whatever the price was in June, but still in June, I mean, prices were they're higher than what homes are selling for right now.
Right. And I think what they'll need to do, well, they're starting to do too, is they're looking at listings and how long they've been on the market, things like that too. And
Right.
they're listing it, if something's comparable, it's been on the market for 90 days and it's 10,000 lower than what, they're trying to refinance for or purchase, it gets tough. But I think you're rightly, we've had no problem getting appraisals to come in at value or higher.
Right. And then
Mhm.
don't expect major collapses. So Florida home prices will come down from their peaks. They will also say no expected full on crash. This means probably not worth waiting for record lows before you buy in 2022. I agree with that also.
I agree with that
I
too.
have a video coming out. There are certain markets I would be, we can I have a video coming out this week, talking about different markets. One of them is obviously markets like uh, Loxahatchee, where you were seeing, and like go back and look at where the market was before COVID. I've told people this, especially with investment real estate. So, and when we were talking investment real estate, even when the low rates were low, everything was like perfect. We were just selling and doing investment real estate. I kept telling clients, look at where the market was before we went into COVID, before you start buying investment real estate,
Right.
because that's where you're going to see the most equity. And then it is where the market was moving, like a Port St. Lucie market where we're seeing, 8 to 10% a year. You're going to keep making money, or at least that market's going to level out. And there are certain markets within Port St. Lucie that I would turn people away from buying in those markets, like stay west of the turnpike, right?
Mhm.
Areas like, also I think there's, there's certain areas like, Trino Parkway that's really nice, that's always been a really, really great place to buy a home, and it's a great rental market. But there are markets where I think you're going to, we could see 20% come off the houses in the next few months.
Mhm.
But I don't expect any major collapses,
Mhm.
um, and I know you don't either.
Right.
So here's what you're seeing. I mean, this is Taylor Morrison offering 45 up to 45,000. Cash buyers can save 50 grand on homes. And then, this is here in Jupiter. Bridgewater's offering 75 grand, which I'm telling you, they're going to be offering more money than that in the next couple of months too. So the new home builders are really getting aggressive. I know that Toll Brothers in Avenir, which is out west by, again, Ibis, which was struggling before COVID, right?
Mhm. Mhm.
It's right across from Ibis. They're offering a free pool and like $75,000 and a free pool. So they're like, some of these places are like 200 grand, but these are $1 million homes, $2 million.
Yeah.
So, um, so I think that the market's still going to keep. So here's why. So we'll get a little bit more. So Narada, this is a real estate investment magazine, or I guess site that I follow. This came out October 10th. Florida real estate forecast for the next 5 years. Will it crash? Florida real estate forecast. Florida home values have risen 81%. So if you're thinking about renting a home in Florida, 81% in the last 5 years. And the same trend is projected for the next 5 years. Now, this is recent. These are guys, and we're about to get real serious and hopefully not scare you to death with this, what I'm about to share with you. But these guys are pretty smart guys. So the real estate appreciation for 10 years, Florida had some of the strongest housing appreciation rates in the country over the past decade. Florida real estate has risen 134%, which equates to an annual home appreciation across the board, Florida, across the board, of almost 9%, according to the data collected. So
Mhm.
this isn't something that just happened over the last couple of years with COVID.
No.
People have been moving to Florida for a long time, and just COVID has put a supercharger on that. Now,
It's
go
people
ahead.
retiring. I lived
Yeah,
in the Midwest for years. And baby boomers are retiring. They're selling their businesses. They're downsizing. They're coming to Florida from the Northeast.
right.
And also from the Midwest. So it's just a trend that's continuing.
So they're asking. So here's a question in the same article, and you guys can look this up. Just go find Narada investment. But according to experts, I'll drop it in the information section. According to expert, there's a lot of information here. That's why I'm telling a lot. According to experts, the national housing market or Florida is nowhere near a crash that occurring during the Great Recession in 2008. This is partially due to tighter lending laws. You've been talking about that forever on
Right.
our show here, Brent.
Yep.
Coming from financial crisis, borrowers are considerably better shape and have seen improved credit scores, and as a result of rising home values, homeowners have a record amount of equity. So again, if your house loses 20-25%, and you've been in it for the last 3 or 4 years, you're still going to have a tremendous amount of equity in it.
Yeah, and you're going to want to make that payment, not lose that equity too.
Right.
In 2008, you saw a situation where there were so many, 80-20 loans, they called them, where, you could buy a home, with a pulse basically and
Right.
zero down, and with a 580 FICO score. That's the worst it got. A 580 FICO score, if you can imagine that, with zero down and
Right.
no, and sometimes no or very little income documentation.
Right.
So very different situation. The
We're
last
very
loan done
different
15
situation.
years ago. So
So
yeah.
here's the big question for you, Brent. This is what
Mhm.
they're saying. Okay.
Okay.
So this is like the worst Halloween ever. If this is right. You like my
Right.
Halloween decorations? I know you're a goody two shoes and you don't do
Don't
Halloween
do Halloween,
decorations.
right?
Yeah, I do. So
All
let's
right.
see.
Harvest. We do a harvest celebration, something
Yeah,
like that, right?
yeah, yeah. See my pumpkin back there.
I know.
My,
It's scary. I'm scared.
you're scared. Henry looks scared. Yeah. Anyway, so here's the scary part. Fed's
Yeah.
balance sheet, right?
Yeah. Yeah.
So I put that nice little line on there with those things. So they're sitting at over $8 trillion on their
Yep.
balance sheet. So these guys are saying if they dump this balance sheet, it's not going to be a correction like we're seeing now. It's going to be a full on nationwide disaster. Like the market's going to, the real estate market's just going to crash completely.
Right.
Now, Powell keeps saying that he wants to get rid of this balance sheet. Do you think he would do this?
Can't. Not right now. I mean, I think they got to wait for those
I
bonds
think they're
to
going to be in
mature.
the real estate market for real estate business for a long time.
Yes. It would create too much supply of bonds if they tried to sell them off. They're allowing loans and bonds to mature and going out that way. It's a much slower process, and there's no rush like that. He did make a small comment the last meeting. I know
He's gotten rid of 133 billion already
out of 8 trillion. That's the drop in the bucket, though.
That's a
right?
drop in the bucket. Everybody understands what $1 billion is, right? Like $1 million you can put in a briefcase. $1 billion you can't fit in your house unless you have a really, really big one.
Yeah.
Right. I mean, I don't even know what is
1,000 houses because it's
I mean, it's
1,000 billion.
Like
1,000 billion is a trillion, right?
Yeah,
So,
dude. Like you can't even like fathom that.
Yeah, and so it's
right?
eight times.
He's got over $8 trillion and they on their balance sheet. So if so they can't do this. It would just be a total disaster.
Right.
And this has been building up for a while.
Yes.
So they say this has been building up since 2007.
Right. Yeah. I see, certainly I see a 75 basis points hike the next meeting and possibly a 50 basis point hike. I think that's where they're going to stop. I don't think they're going to start to sell off the bonds. Not yet. Yeah.
Well, this would be the only thing that investors and economists believe that will totally sink the real estate market completely. It would throw us into, it would be almost impossible to recover from. It would take years. It'd be the same thing that happened in 2008. It would take years to recover from They just
Well,
they've got it. You know, I believe they need to slow down a little
yeah.
bit here. Hopefully, this next round they're going to start slowing down a little bit.
Right. Well, the data they look at is pretty much rear view mirror stuff, and if you look at wholesale inflation and even retail, consumer inflation, it really peaked in March. And so, as these months fall off or the super high inflation numbers, those will start to drop off as, new months are brought on. The concern was adding a 0.4 when they were expecting a 0.2 increase month over month.
Right.
So, so it just, the year over year was 8.2. So I think it was just higher than expected, so,
Right.
but wasn't a lot, but it was just, more than expected. And they're just market's hypersensitive to that. Really ironic how much it responded initially to the news and then how it crawled back over the course of the day. And then the stock market started to take off. So, I think it just is telling us they've taken it about as far as they can.
Right. I mean, and I just don't see us coming out of this until we start producing more oil and gas.
Right.
I mean, raising rates and sinking the stock market and the
laying
real
people
estate
off
market isn't, and it's not going to help inflation.
No, inflation's, so much of it's oil and transportation and, all those goods
Right.
have to be manufactured. They have to be shipped. I mean, oil's used for
What did
plastics.
our
It's used for
client say
everything.
to you that he's a truck driver? What did he say to you? His gas prices have gone from?
Yeah. We use 3,500 a week to $7,000 a week and
I
fuel,
mean, that's just craziness.
Yeah. And he's trying to run a business. He's self-employed. So
I saw a statistic the other day. 38% of people are behind on at least one bill.
Yeah.
Americans are behind on at least one bill. That came from mortgage. I think Redfin put that out.
Yeah.
Oh no, Rocket Mortgage put that out, I think.
Redfin put out something else today. It was interesting. Rents are still increasing, but half as fast as they were a year ago.
Right.
So so there's some things like in some of the
Well, we could see rental prices cap because people aren't going to sell their home because they can't get what they want for it, so they're just going to hold on to it, and they're not going to go buy one of these. They're not going to go buy something else if they don't really need to move.
Right.
I think what we're going to see, people moving into Florida, they have to buy, or people that want to get out of like South. I mean, we're still seeing people moving from South Florida up to Port St. Lucie. That new community cadence is rocking. Also, PJ Verano has 18 new models, and they're selling homes like crazy in there. It's a very desirable neighborhood. And they have no more lists. Nobody has a list anymore. I don't know about Riverland, but I would say that that's over probably too. They're not going to have any more lotteries.
Right.
So getting back to rentals, we're going to get back to the rental thing. So this was a good slide that just came out. Median asking rent since 1988. And look at that rise.
Yeah.
So even if it levels out because there's more people putting their houses on the market just to rent them because they can't get what they want and they want to keep the equity, and they don't want the interest rate. I mean, it's just you're paying somebody else's bills.
Yeah. Yeah. It's the graph's getting steeper, isn't it?
Yeah, it got way steeper. And I mean, and I think because of taxes, right? Rental prices are going to come down way slower than housing prices are.
Yeah.
Housing prices could drop 20-30% in the same community and the rental prices not even move. Matter of fact, we have some rentals coming up here. We're raising prices on them because taxes are going up next year.
You're right.
So we have to get more money on it.
Yeah. And then, people that, landlords, I've talked to landlords and they're saying, hey, I've had a good tenant. I really don't want to raise their rents, but I feel like I have to stay with the market, but also to cover taxes, to cover my expenses. I mean, they're
Yeah,
feeling the
unless they
squeeze
own
on
it for
inflation too.
cash.
Right. They own businesses. They got, they're paying their people more, and you know what I mean? It just
Right.
trickles
So
through.
getting back to Florida, right? So getting back to Florida is here we go. So year over year, right, from last year, Florida has a national average of 60,000. Florida is 100,000 in equity in a year, average.
More
year
equity
over
now
year.
than ever in the history of the United States.
Year
United
100
States.
grand year over year, right?
Yeah. Yeah.
So percentage change in home prices since 1991, right? So we started coming out of the 2008. Look at this. 290%, 422% in Florida.
Wow.
It's crazy.
422. Just a trend.
Yeah, it's a trend.
Is any? Yeah. Wow.
So, I mean,
first time I've seen this. It's interesting.
Yeah.
And you see, another one I see that's very high is Oregon, and that was people migrating out of California for affordable housing. That's what that was for sure. And Idaho, a ton of people moved out of California to Montana, Idaho, and Oregon,
Utah,
and
Colorado.
Arizona.
Colorado's seeing some price drops, though. I mean, they could see they're actually seeing some serious. They're seeing serious price drops now.
Right.
That market way overheated.
Oh, it did.
But look at Montana. You know where that is, right?
Oh yeah.
All the tech guys went to Montana because they left
their ranches.
Right.
That's what they did. Absolutely.
Yeah.
And Colorado too. Colorado, that's Telluride. You think about, Aspen, Vale.
Yeah.
Those are all
Utah. Look at
those aren't local folks.
Arizona, Idaho.
Right.
Those places you'd never think anybody'd go to, right?
Right. Very wealthy people leaving for second homes, frankly. Just getaways. Yeah.
Yeah. People are moving to Florida to live here, though.
Right.
So
interesting.
Yeah. So let's show your little graph here, your little thing here.
Oh, the calculator?
Yeah, it's pretty cool.
It is really cool.
All right. So you guys have to check this out. Brent sent this to me today. I've never seen it before. All right. So I just took Port St. Lucie, a $500,000 house, 5% down, 6.5% interest rate, right?
Yeah, I'd say it's
that's fair. 30 years.
7, yeah.
To rent any home, the rent a $400,000 house, which is basically the bottom of the market in Port St. Lucie, you're looking at $2,900. But we can be nicer to people and make it $2,500, right? Explain this, Brent.
Yeah, good luck finding it. But yeah, I think I always say use the most conservative numbers you can.
Right.
And you want to look at, hey, should I buy a home or should I rent? Because you have to live somewhere, right? And I think that this is a very important thing for people to understand. Lee, I used to do this training years ago. I started doing it, 25 years ago. I'd sit down with employees and say, this is what we do for a living. And I want everyone to understand why we do what we do. And really, if you look at this graph, at this calculator, and really understand it, it's a game changer. And I always say take the most conservative numbers. I'm glad you're doing that too. A $500,000 house in Port St. Lucie. I don't think you can rent a $500,000 home for $2,500, but let's say you can, right? And
right.
But and what we do is we assume that rents are going to go up 3% a year, which they probably go up even higher, right? But I think putting this in the calculator, the most conservative estimates we've got, and this includes, by the way, 0.5% of the cost of the home for upgrades every year. Some point in time you need a roof. It includes real estate taxes, insurance, and tax benefits. So it's a very good. It's an all-inclusive look, and you can go to the Nerd Wallet. I don't know if you can show the link, Lee, maybe in the show notes. But we can put that up. That way they can do this themselves and really start to and run your own numbers. And just really say, hey, do I want to own a home one day or do I want to rent? And when you run it out over the long haul, it's astounding the difference. How much you save over the life of owning a home and versus renting a home.
Right.
Yeah, you saw that graph. That steep incline on rents too. I was renting my first rental when I was right out of college was $190. You know what I mean? And my first home was $44,000. in Columbus, Ohio, and it's, worth well over 300,000 now. It's a tiny, tiny little house. But, so, I would have rented that for, gosh, 2,500 a month easy now. You know what I mean? And it's right downtown German Village and right downtown Columbus. And so, that could be paid off now. So I'm kicking myself for selling it. But, that's the type of thing that home ownership can bring over the long haul.
Right. But even you're seeing like you're spending less money over 6 years, but you're building equity here.
Right. Right.
So this is somebody, the rent side, this is somebody else's house.
Right.
This is yours.
Right.
Right. And if we go back to what, you're seeing happen here in Florida, if, the numbers keep growing the way they do, buying is a good option, way better option than renting, because at least you're, and mortgage rates are going to eventually come down.
Oh yeah.
And you can always refi your house, but you can't get back equity. Now, we could see Palm Beach County flatten out for a while, but the Port St. and I would say Martin County, but the Port St. Lucie market, I think you're going to see some equity growing in there because you have so much new construction. I mean, it's just everywhere.
Right.
So, I think, yeah. So the sum up to everything we talked about, I think we're going to see home prices definitely come down. We'll see, 10 to 20% depending on the market. We may see more than that depending on what that where you are in the market. Well, I would have a really good real estate agent who knows the market. I wouldn't be working with a first timer. Not right now. There's just a lot going on. I would definitely shop rates with someone like Brent, so that, just don't take the first rate, because rates are really high right now. And there's, Brent can shop multiple lenders for you because you're a mortgage broker. So a mortgage broker is a great person to use right now. And then, as far as, negotiating, there's negotiating on, seller credits to get you a credit to help closing costs, buy down the rate. Pretty much everyone, sellers right now that are trying to get rid of their homes, if you're seeing a home on the market right now, I've found that most of them, they're trying to get rid of it. They need to sell it if they're on the market right now. And they have a lot of competition. So that's good for buyers right now. And if you're trying to buy, you're coming in the state, you're trying to buy right now, it's a good time, even though rates are high. So, and then as far as new construction goes, I mean, you can negotiate I can tell you right now with Mattamy Homes, when you walk in the door, they're going to tell you what they're going to give you. I will show you that you can negotiate more than that. You can do it with pretty much every builder out there right now because they're trying to sell. And if you're looking at new construction, especially with the publicly traded ones, these companies like Pulte, Colt, they're publicly traded. They're going to be looking to Taylor Morrison, Devasta. They're going to be looking to get their sales numbers done by the end of the year. So they're going to get very, very aggressive.
Quarterly and year-end numbers. Yeah.
Right. So they're going to get more aggressive the closer they get to January 1st. So right now you can go make a deal, and you can make a deal with sellers on resales if they want to sell their home. And you can make a deal with new construction because they definitely want to sell their homes.
Yeah. And right now, from the lending side, Lee, start early in the process because, you really want to get the best interest rate by, doing the what if scenarios and just really looking at, getting yourself mortgage ready before you put together something for an underwriter to look at. So start early.
Yeah. This is your girl here, man.
Oh, look at that. Oh, look at that. Oh,
Yeah.
that's great. She's wonderful.
Yeah, she is. She's a good girl.
She is.
We got lucky, Brent.
I know, right? I tricked her.
Yeah. Lisa set up all my Halloween for me.
I know, right?
She came in there and just started setting up Halloween.
Is that right?
Yeah.
Got you all worked out?
Yeah, she does it for me. And then she tells me that she makes sure that I turn everything on before I start the show. So anyways, well, thanks for joining us again this week. Sorry we had to move from Wednesday to Thursday. We had a little bit of an issue with my electricity. Something was going on with FPL. I promise I paid the bill, but they kept turning it off, and it was flicking off and on like for over 2 hours. So I didn't want to get cut off in the middle of the show. So we moved it to Thursday, but next week we'll be back on Wednesday at 7 p.m. So don't forget to join us. We appreciate everyone join us that did tonight. If you're watching this video after the live, please don't forget to subscribe to our channel and leave a comment in the comment section. Let us know what you think about what we went over tonight. And also go ahead and put any questions that you have for Brent or I in the comment section, and we will answer all of our questions. And we will reply to all the comments. So that's it for the night. Do something nice for people out there. Be compassionate. Right now, I'm reading this book right now on meditation. It talks like the whole first 7 chapters is on compassion, man. You actually will live longer. There's scientific proof right now that says that if you are a compassionate person, you care about people, and you're compassionate every day, and you're grateful no matter where you are in your life, that it'll make you live longer. But if you're not compassionate and you're not grateful, you're going not to live longer. So you want to live longer, and you want to be compassionate to people. So help your neighbor right now, especially with the holidays coming around. It's going to be tough for some people. So, and then also be kind to each other, and we'll see you next week. Thanks for joining us again. And thanks everybody for your comments. And that's it.
Right. And say goodnight to Henry.
Oh, yeah. Say goodnight to Henry. Well, he's all asleep anyway.
I just rolled over.
I know. Yeah. All
you
right.
You talk about compassion.
Oh, my God. Dog's worthless, man. All right. Goodbye, everybody. Thanks for joining.
Thanks, guys.